Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's. Good morning, everybody. Sorry for the loop there. Just had to turn that off. Hope you're doing well. It is, of course, Monday, a fresh week in the markets following what was a crazy one last week. I've got some setups forming here today, and I want to share my thoughts across several markets that I think are going to be interesting, to say the least, watching in a couple months to come. We've now sort of heard from the Fed this idea that interest rate cuts seem to be very much on the table. The dollar index weakened substantially on Friday, came back down into a level of support, seems to be trying to bounce here today. The NASDAQ is a little bit lower here this morning. You can see just a little bit of a trail lower. I wouldn't look too seriously at the indices pullback here. We just had a huge move higher, perhaps a little bit of profit taking just to start out the week. But we are back towards the previous all-time highs on the S&P 500. The Dow Jones and the Russell had very nice pushes on Friday. Take a look at the Russell index, probably in terms of indices, the big winner on Friday for sure. We also saw cryptocurrencies. Very interestingly, crypto had the big pop on Friday and has since rolled over, right? Take a look, Ethereum holding up a little bit better, but Bitcoin had the pop, that bullish engulfing completely failed out and is now lower than where it was on Friday. So very interesting to see some of the reversals that we're seeing post Powell. We also see gold reversing a little bit of its gains here. Maybe not too much of a surprise just because gold has been a little bit choppy here, to say the very least. Silver's pulling back. I actually like this one on the 4-hour chart quite a bit for possible longs this week. I am looking at the gold and silver pop. Now looking at the pullback here. Silver looks really attractive to me for possible longs. I am interested, keeping an eye on this one, probably around that 38.2 to 50% retracement. If we were to get a little bit more of a pullback, kind of this big long push higher, I actually think the move in metals may be one of the more sustainable ones following through from Friday. And I'll get into why I think that. Big picture, right? If I'm taking a look at the silver market, which is a chart that I really like right now. I've been talking a lot about silver. I am looking to get involved. If we get that pullback here today, a little bit of sell pressure to come in following that post-Powell rally, I think things could get interesting. I do want to just talk indices for just a second and why I am really hesitant to be super bullish on stuff here this morning. I'll tell you why. I think that you have problems, right? You have stagflation concerns, right? I think that you had the initial market rally on Friday following, hey, Powell's going to cut rates. It's all going to be good. But we have to understand, why did Powell shift gears so much? And the concern that I have is showing up in the edge finder, right? The concern, first of all, you don't see indices getting bullish readings, which, usually the indices, if they're at all-time highs, usually the edge finder is giving them a bullish reading. Yet, right, even though momentum looks strong, what's the concern here? Well, I'll show you what it is. The concern here is that the economic data supports rate cuts, and that's the issue, right? Economic data supporting rate cuts is problematic if, with the economic growth metrics weakening, we also have inflation. That's the problem. The problem for me, the reason, when it comes to indices, I'm so cautious. I had a lot of people in my comment section on my Sunday video, oh, another perma bear. I am absolutely not a perma bear. If anything, I'm closer to being, I'm most of the time, I'm bullish on indices. But I have a real challenge in front of me with, I own a bunch of stocks. I bought a bunch of stuff during the April sell-off. I bought it in February, March, April, and even a little bit in May. So I went long earlier this year on a bunch of stocks, like individual companies. But I'll tell you what, I am actively taking profits on stuff and building up cash because I'm not interested in shorting the markets. I find that to be a very difficult trade. Indices tend to float up by default, not all the time. And in market corrections, they move down very sharply. But I don't have an interest in trying to time a short sell. But I'll tell you what, the data here for me does not support aggressively going long stocks. I'll show you why. I mean, it's really simple. This score right here, what you're seeing here, the Edgefinder's reading, what it essentially does is it automates the macro data analysis. So what it is scouting out, what the Edgefinder is sniffing out right now, we've got stagflation risk. And it's a real thing. Markets seem to kind of be cheering the idea of rate cuts, but why are they getting rate cuts in the first place? You have to be careful. Why did the Fed, why did Powell come in and say, hey, we're going to get rate cuts? Or he didn't say it like that, right? But he hinted at the possibility of rate cuts this year. Why? Well, he said it. He said that the jobs data is now at risk in tandem with risks to inflation. That is stagflation, right? Where you have risks of inflation, but you also have the stag. You also have the slowing in the economy. And so you put those two things together, you've got stocks at all-time highs, and I get a little bit nervous. Now, again, where I got, obviously the backlash is, Nick, why you get short at your own peril kind of thing, and people accusing me of like getting short on the market. I'm not short on the market. It's a trade that I think is very difficult to time. Are there people who do it? Sure. But bears have a harder time than bulls. That's just for sure, especially in the last 10, 15-year bull market that we've had. But my concern is that the Fed is talking, yeah, we're going to cut rates. But what if we're cutting rates because there's a problem? What if the issue is we still got inflation? Inflation's at 2.7% CPI. The producer price index jumped to 3.3%. PCE, which we get another report on Friday. Keep an eye on that. We'll see how that adds into the calculus here. Look, inflation is still there. You've got problematic inflation, and it's been rising in combination with jobs data that's not been very good. The NFP report showed, that's why Powell is giving us the clue that rate cuts are coming. But the market just took it as, oh, this is all cheery, it's all good. My concern is that, okay, we might be at the cusp of an actual, slowdown in the economy in tandem with sticky inflation. And so does that mean I want to be long stocks at all-time highs? The answer is no. Do I want to short them? Nope, not going to do that either. Waiting. Why? Because I think that the risk to go long here on stocks, if you're long today, right? I think the risk outweighs the potential upside reward. Could I be wrong? Of course, you can always be wrong in markets. But I don't really love the idea. I don't love the risk to reward profile of buying stocks at this time. I think that the bigger risk is we have problems in front of us. And that could be inflation continues to trend up while labor data and economic data continues to trend down. That combination is not pretty. And so for me, stocks are on pause. I'm not shorting. I'm not going long. Does that make sense? I hope that breakdown makes sense. That is why when it comes to indices, why I'm very, very cautious at this time. And guess where that leads me? What do we want to be watching during a stagflation environment? Here you go. Gold and silver. Gold and silver are back on the menu for me. They've been on the menu. I've been watching the top setups page on the Edgefinder the last few weeks. I'd like to purchase the Edge Finder with a one-time payment. Is there a promo code? Arif, yes. The best way to do that would be to send us a direct message on our website. We can get you the biggest discount. Maybe James, if you could drop us in the chat the talk to link so you can connect with, I believe Emily or Hallie from our team are in the office right now, so they can get you set up and give you the best possible discount that we currently have available. So if that is something that you would like to pursue, just send a message right here. Click this link. You'll be connected to speak directly to our support team, and they can get you set up with the Edge Finder and get you the biggest discount possible. Nick, I sent an email to Emily about a payment issue 2 days ago. Do you know when I might expect a response? David, she is in the office now. So if you are waiting on anything Edge Finder related, obviously over the weekend, we are a lot slower to respond, and then we get to everything on Monday. So Emily is in office. I was just speaking with her, and she had a nice weekend. Thanks for asking. But yes, she'll get to you as soon as possible. What's your thoughts on EuroCAD? Yeah, so EuroCAD is a short trade for me. That is, it's not going great, but it's also just such a small position. I am looking at this as a longer term kind of short idea on EuroCAD. I mean, this is really, you're talking long term, but I think that you could get some retracement here, and so I'm playing for that. It's a really tiny position for me, so if it keeps moving higher, I may actually get a chance to build a bigger short position. With currencies, I'm very much more of a kind of longer term mean reversion style of trader. And so with another one that I'm watching is NZD CHF. I have a small long position on this one, which has bounced so far, looking for some reversion on some of these pairs. Let's keep going, take a look at gold and silver. So I was just talking about what I like about here, or what I like in this market. And right now, the thing I like is silver. Silver is probably top of my watch list. So if we do get a continuation to the downside here today, a reversal or a pullback to the downside here today, I would be looking for that continuation of what we saw happening on Friday in metals specifically. If stagflation risk is kind of my base case right now, like if that's what I think is going to kind of dominate market consensus and headlines, where do I want to be? I want to be long metals. That is the trade. If, right, and this is an if, we don't know this for sure, but if stagflation continues to be a pressing issue for markets, meaning in the coming weeks we get, let's say, some more sticky inflation. Let's say PCE is hot on Friday. If that is our scenario we're going to be dealing with, then metals should do well. If something changes, if we get a good jobs, if we get a good jobs report and cooling inflation, then those trade ideas will be terrible. Like if we get jobs start to materially increase, like improve, and inflation come down, then gold and silver are going to get rocked. But in my opinion, I think the most likely scenario right now is we do see risks to jobs data, and we do see inflation still sticky. That dynamic, stagflation, tells me metals look attractive. So I'm looking for silver, which was up huge on Friday, to give me a pullback into this supportive range. Stock market, US stock market opens up in 10, 15 minutes or so here. We'll see what this kind of initial drift, if this is going to turn into a larger retracement from Friday's jump, or if this is going to push higher. When I take a look at the S&P 500, again, this is not a market that I can justify shorting. That was a huge green candle on Friday and not something I'm trying to jump in front of. You did find some pretty good support here around this 6370 level on SPX. NASDAQ, you can actually see we had some interesting rotation in the last week or so, where some of the value stuff, like take a look at Dow Jones, looks really strong. The Dow breaking through those highs, pull back into this area. Let's see if bulls can take it from there. Russell also looked really good. Some of the interest rate sensitive stuff really popped hard on Friday. Same thing with Ethereum, right? Clearly telling you cryptocurrencies love the idea of rate cuts and possibly love the idea of stagflation too. I mean, I actually think that the stagflation risk in a small way could mean some outperformance relative to the S&P 500 on things like Ethereum, Bitcoin, gold, and silver. We'll see though. That's kind of my thought process going into this week. Is I would kind of sit idle on the indices. I own several stocks long that I would like to kind of do stuff with. Like I've been, like Tesla, for example, I've sold calls against my Tesla shares, as I think that there is some potentially limiting upside for stocks due to the environment that I think we may be going into. If I'm wrong, I'm wrong. That's the thing about trading, is like sometimes I'll map out an idea and I'll just be dead wrong about it. But right now, the educated guess that I'm working with is that I think stocks could actually pull back. And I think that metals start to look attractive. That is kind of my base case. Let's go in line with our top setup simplified view really quick. Also, by the way, Edge Finder free version, a little bit of an update on this. So was it last week? Yeah. Last week, we launched a free version of the Edge Finder. Now, it's a limited version, doesn't have all the bells and whistles that the premium tool offers. Obviously, like that's how we support this product, as we sell copies of it. But we did launch a free demo version of the Edge Finder. It's available now on our website. And I wanted to mention that we are actually going to be gradually tweaking it and improving just the Edge Finder free version. We want people to use and love. We've had some really good feedback. We've also we've had some people asking for some more features to be unlocked. We are going to be tweaking that, and we're going to be making it so that the Edge Finder free demo version is a really useful tool. Of course, what the idea there is, genuinely being transparent about our marketing here, is we want it to be useful enough that you explore it, get something out of it, and find the tool useful, but also encouraged to purchase the full product. That's, when it comes to marketing, I don't hide anything about it. We don't have tactics that are secretive or anything like that with what we do. We're just as transparent as we can about it. The Edge Finder free version is now available on our website. If you do not have access to the Edge Finder free version, we'll drop a link here in the chat really quick to where you can sign up and get that sent to your email. That's step one. So if you don't have the Edge Finder free version and would like to explore it, check this out. Just drop the link. Thank you, James. So click this link, fill out that form, and it'll email you a copy of the free version of the Edge Finder. Fully transparent marketing. What you get is the limited free version of the Edge Finder, which does have some use cases, but it is limited compared to the premium version. The goal is to give people a chance to explore it, try it out, get some utility out of it, try things, and then essentially from there, if you really like it, then become a customer, support our products, and get access to some really great stuff. So that's our primary goal with the Edge Finder free version. We are a business at the end of the day, but we also, want to give people the chance to really explore all the amazing tools that we're building. So check this out. I'm looking at the Top Setups Simple view, and I have been using this page more. I used to use the Top Setups like default page. I've straight up just moved to the simplified view. It's easier from a glance to understand what's going on. It's really simple, right? Check this out. The Top Setup Simplified view, which this is a premium feature, the sentiment score, right, looks at COT data. It looks at the put to call ratio. It looks at retail sentiment, all the tools and indicators and that we have underneath the hood, and it generates just straight up an output. Gives you a score -3 to +3 on each of your favorite assets. That's what it does. Then it looks at the technical store. It's looking at price action. It's looking at momentum. It's looking at trend, and it's generating a score here for us automatically as well. And then maybe the biggest utility to the average trader, the economic data score. The Edge Finder browses through our catalog, our extensive data points on fundamental analysis, CPI data, NFP data, PMI data, all that stuff. And it generates, again, it goes through each one and says, is this bullish or bearish? Is this bullish or bearish? And it generates a finalized score for each of our assets. Finally, the score output is just the summation of everything here, right? So that is how the Edge Finder works on a simplified view. And honestly, from my own, I'm the one who has designed this product, but I still just end up using the simplified view because it's in the name. It's simplified. Gold and silver still remain very strong on the watch list. I already told you my plans there. I'm looking for buys and pullbacks this week. Another one that I'm interested in is I am looking to get short the dollar, euro dollar, Kiwi dollar, pound dollar. all look attractive to me if we do get some pullbacks this week. So scrolling on to currencies here, we do have euro dollar making a little bit of a reversion here. If we do get a pullback down into this range, if we recapture kind of this full candle, would not be surprised. Forex loves to chop around. That would be really interesting for, in my opinion, a possible buy. So I'm looking at euro dollar longs, pound dollar longs as well. If we do get a shoot back down towards this 134.50 to 134 level, that may be an area where I'm looking for some longs as well. And then finally, Kiwi dollar actually looks pretty attractive at current levels. We've had a bounce off of this low around the 0.58 zone of support. So I am looking for Kiwi dollar to also be a possible long setup for me going into this week. So if I take that trade, I'll share it in our Discord group, in our VIP room. I will be keeping you guys up to date on that. I'm also, like I said, I'm looking at silver, possible longs if we do get a reversion back to this kind of 38.2 level, let's call it. I am interested in possible longs there. I do think that gold and silver are probably my top setups for this week. Other dollar crosses. If we take a look at dollar yen is getting a very, I mean, that was a huge move lower on Friday. Bouncing, however, though, and just kind of goes to show the nature recently of the currency market. It's been very choppy, just like most markets have. Low volatility market right now. In fact, let's just look at the VIX in reference to this. You do get a little bit of a poke back higher on the VIX here today, back up to 15, but still very low VIX. We'll see what happens here. This being so low is why a lot of charts are just not moving very much, right? Other than the big Friday pushes. The VIX is suggesting that there's just not going to be a lot of movement for a little while. A little bit of a pop, and sometimes the VIX is wrong, right? But a lot of times the VIX is right. So volatility expectations right now in markets are very low. That's what we can read from this. Still kind of crazy to me that Bitcoin has already reversed all of its gains from the rate cut announcement. Again, I'm going to go out on a whim and say I would not be surprised if stocks do the same this week, as the sobering reality of we have inflation and jobs data problems could spook the market a little bit. I know everyone's like, oh, cheering rate cuts, but you know, at the cost of sounding like a doomsdayer, my concern with that is that stocks are at all-time highs and we have inflation and labor data problems. So to me, stocks look a little overdone, and the area to be still remains metals. Taking a look at oil, someone else asked about oil. Oil prices were looking like a setup for me, but I do need to just look at, sorry, let me add in, I just want to look at oil prices for a second. If I just go US oil, pull this up, getting a neutral reading. So economic data suggests bearishness, sentiment data, I want to look at that a little closer, but I have no, I'm watching oil. If we do get a spike in the negative direction for score on US oil, this might be a setup for me this week. So I'm keeping an eye on that one. Let's look at, what did I want to look at? I had something. Oh, I want to look at some market sentiment. Put to call ratio. So the put to call ratio on the S&P 500 is sort of in neutral territory. On Friday, did we get, where's our, okay, so on Friday had a little bit of mixed sentiment. You had some put buying and some call buying kind of mixed in the middle. If you're new to the put to call ratio, it's one of my favorite sentiment indicators. All it does is it tracks volume on the options exchange. Are people buying calls or are people buying puts? And when people are obviously buying a lot of puts, this chart goes higher. And when that goes higher, that suggests that the market sentiment is really, really bearish. And when this goes very low, that suggests the market is greedy or there's a lot of calls being bought on the options market, right? So we can also, by the way, we can repeat this study for a lot of stuff. We got gold, we got NASDAQ, Nikkei, Russell, silver. You can pull up all these things if you have a copy of the Edge Finder and explore it. And it is, like I said, it's a feature on the Edgefinder free demo version that you can explore too. So if you didn't already grab it, I mentioned it earlier, Edgefinder free demo version can be accessed using the trial link. We'll drop that again in the chat here for you to take advantage of that. Get a copy of the free demo version and play around with it to see if it's right for you. Okay, so put to call ratio. Let's look at just a couple other indices here. Russell, we did get a lot of calls last week, a lot of bullishness, which makes sense. Russell was up a ton. NASDAQ still a little closer to the high call side of things. So a lot of people buying calls in the NAS. No surprise there. Dow Jones was kind of in hated territory, right? But now has kind of drifted back into neutral camp. So definitely worth keeping an eye on that. Last look at silver here. Silver dropped back into pretty close to extreme greed territory. So I would like to see that call demand get crushed a little bit on silver, which is why I'm, kind of waiting for that pullback. So if we get a shoot lower here, which you'll probably see in the put to call ratio, you'll probably see if this were to shoot lower for a day or two, that would likely change up the options market pretty quick. A lot of people would cover their, or essentially close out of their calls, maybe even buy puts. And that's a dynamic where I like to get that, what I believe to be a better risk to reward when people are kind of jumping ship and going the other way. So I'm watching silver. It's a top setups for me this week. I mentioned this earlier. If you want to get access to the Edgefinder free demo version, now available, we'll drop the link here in the chat to sign up for that. You can start playing around with our tools, take your trading to the next level, and explore what we have. Somebody asked for the economic surprise meter. Dustin, here you go. Currently looking at some interesting kind of data. Dollar still looking soft. Kiwi dollar a little strong. Pound dollar a little, pound looking a little strong. Yen looking a little strong. And then a whole bunch of neutrals for the rest of them. So like I said, get access to the Edgefinder free demo version if you want to explore it. And there you go. Up next, guys, we've got Ivan FX taking over the stream. You guys know him and love him. He's an FX specialist. Of course, watches a broad range of markets as we all do, but really tends to go heavy on the FX side of things. So if you're interested in some currencies and perhaps interested in one-on-one coaching, that's something that Ivan offers as well. We'll drop the link to his YouTube channel. He's going to take over the stream for a little bit. Stick around with him just after this quick break. Stay tuned. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hello, everyone. Now, there was a problem from yesterday, and it is CAD yen. And I said in the weekly planning meeting that we had inside A1 Discord channel, Zoom, sorry. It was. I said I'm not going to do anything with CAD yen. And guess what? What happened? The meeting was okay. That candle, but yeah, we are higher. I was wrong, but there is one thing I'm right about. It is every single year I say this Monday. I say I want to buy yen pairs. And it's been, this is, I posted this on Facebook apparently in 2019. Third week of August, look for buys on yen pairs. So CAD yen, Aussie yen, Euro yen, British pound yen, New Zealand yen, if I can just click it, dollar yen are all higher on the day. It's supposed to be like that. Now, where do I get this weird stuff from? And this is not me bragging. This is not me saying, oh, you are not a great trader whatsoever. It's all comes down to what are you listening to? Are you listening to the market? Are you taking away your own emotions and say, what does the market do every single year from that's about Wednesday, but so that would be Monday. So a Monday about there, that is 2 years ago. That is 2022, so 3 years ago. That's about 800 pips. Okay. What about 2023? That's just one lucky day, right? Okay. 2023. We are from that Monday there. Okay. 200 pips again with a bit of a drawdown. Okay. What about 2024? 2024. Thank you very much, sir. I pressed 23, but I don't know. What about 2024 then? Okay. 200 pips again. 200, 200, 800. Some of them had a bit of drawdown. Okay. So what about this year then? Well, I don't know. It's yet to see. But what I planned for yesterday was a bit of a pullback into 172 level, and it hasn't happened yet. But New Zealand yen is about to make a high, so that's where my new entry is going to come from. And what about the yen? Okay, no pullback really, but that's a market open entry, as we discussed. And then euro yen, yeah, and then CAD yen. I didn't bother about CAD yen; doesn't really matter to me. And then dollar yen. I said dollar should be weak today. Sorry, pullback and then weakness. This is yen weakness. What about euro dollar? I said 168. Sorry, 1680. Barely. What about pound dollar? I said, well, if you can come down to 135, 134.90, that would be a good level. And then New Zealand, what if it comes down a bit more? I don't like the corner pullback; it's a bit small, but let's say that this is what trading looks like for me. This is what trading should be. And I've been silent. I know I've been silent throughout July. Now I had a bit of a dollar yen trade. From where was it? From 12th of June going into 21st of July. I don't know, good month or so. Didn't trade much more than that. But that's what trading to me looks like. So to me, I am all moon, I'm all fun, I'm all into what market can set up for us today. So for tomorrow, I hope and I pray that we're gonna have pullbacks on yen pairs, dollar pairs. That doesn't need to happen, but that's what I need. Not financial advice whatsoever intended. I need pullbacks for me to get an entry, for me to engage into the market. What do you think about pound New Zealand short? And the first thing that comes to mind is pound is bullish before I even look at the chart. Now New Zealand is going to be strong. Pound is going to be strong. Then I don't find this to be a very interesting thing to do. Now, don't get me wrong. I think technically it could definitely happen. But from a fundamental standpoint, which is my tier one thing that I go through first, is fundamentals. That is central banks and the RNB set, the New Zealand central bank. They're quite dovish. They're quite bearish. New Zealand isn't doing too well. And pound, they're not going to hike. They're not going to cut maybe until December. And New Zealand is going to cut again this year. And inflation in the UK is a lot. So for me, selling into that story on a pair I don't really trade, not really. Okay. Are you guys back to trading soon in comments? Or what? Are we having a social call here? He's not supposed to be here on Mondays, ball out. But okay, cool. So, I said dollar weakness. Why? Because Powell said that. What did he say? He said that we were. Where do I have his summary? Do I have a summary here? No, I don't have a summary. So Powell technically and said that they saw a lot of weakness, strong weakness in the labor data. It was also mentioned that that inflation is still somewhere around there, but very concerned about dollar weakness and about labor market weakness, and for that to be true, then that needs to warrant a rate cut. Now, market did fall on Friday because of that statement. And market priced in at that time, there was a 90% chance that we can have a rate cut. At the moment, we don't have that priced in at 90%. Currently, the market is only saying 84%. So there has been slightly kind of pause or realization maybe that we might not be so sure about a certain thing that's going to happen in September, but nevertheless. So technically, it's a level for me, and we did support and resistance why we have all these levels pointed out, is a couple of things that I do mention in my teachings, and what I really want to have is that you should be in front of the curve before it happens. So if you were thinking this was going to fall, which I wasn't, so I can't claim that I was all bullish last week before Powell admittedly he wasn't anymore, then we are at support. So for me, it's not really a great level or a great technicals to be looking into. But if that means dollar weakness, doesn't that also means S&P 500 strength? And it does. And yet again, I have not gotten the pullback and the fall that I need and I want and I'm desperately asking for ever since June happened, or May for that matter. We had a fall going into August, but wasn't really great enough for me. Now, am I going to be the duck that's always waiting for something, never get it? Not really, because I still have my auto buy every month. But technically, you are at the high, so that also went away. Now, can you scalp it? Can you sell it? Can you whatever else that you think of doing? Totally up to you. Now, I would like a deeper pullback. And I know Nick really wants a deeper pullback. And a deeper pullback is the only way when you're going to 6,400 that you want to pull back always. And taking advantage of those is always going to be paramount. Another part to me is seasonality. Seasonality around this time of year, we're not supposed to be bullish currently. Now, if I pull up last year, we had a September that fell. That's kind of my last straw of help that we are going to, that we potentially can have a drop of 4%. And that's why I'm not buying currently, and that's not why I am chasing current highs. Because if we come into October, if we come into end of September, we are gonna make higher highs anyways. So it's all about that. Very patient. And if I'm foolish to be that patient, only levels only time would tell. There is nothing else in that. Okay, that leads me over to euro dollar. And I said 1680. I almost got 1680 this morning. I got 1686. But again, very aggressive entry, very bullish. And I would rather, if anyone could help me, getting the market down to 114.50. I'll be more than happy. So a bit cautious yet again, but then seasonality, things supposed to be going higher, was supposed to be going higher. It will go higher now that we are going into resistance, but then the trend can continue until whatever time. Now, where do I look for a target? I would argue 18 and a half, 118.50. It's probably better level. So that's 150 pips up. So not really a massive, fantastic trade to talk about home, but there is that. Same thing for pound, coming up to 138. Not really a great trade to take home. Okay, well, 300 pips is better than nothing, I guess. And New Zealand dollar coming into, okay, not really, but maybe 0.60, so 0.60, 80, back up to this resistance level is what I hope for. I don't know if I will get it, but there is one problem with my plan, and I know that Bollard's going to be very happy to hear this, is rate hikes from Bank of Japan are likely to come in around December. Now, we have seen a slowdown in the Japanese economy lately, where inflation has come down from 3.3 to 3.1, and that is still above 2%. And the market is increasingly pricing in a rate hike scenario. And I believe that scenario should take form in space about first week of September, meaning anywhere between 2nd and 5th could be a peak in those yen pairs. And that's why I'm like, where's the next weekly pivot target? That's where I would get out. And after that, because of last year, the fall that I anticipate because of that pricing in is going to be substantial. It's going to be a cascade. So my first priority is one, to get it now and then get out next week. Because I definitely see that what's the most important thing right now is to stay clear of obvious risk ahead of you. And then somebody said earlier, like they reduced their position on silver because they were uncertain about how they were supposed to do this, and they saw risk. And the only way going forward is to do that. That's the proper way to do things. So I see gold was requested, and I know no gold will be requested for in its entirety. Now, take a step back. This is 4 hour. Does this look bullish? Does this look trending? Does this look like a support level of magnitude that you would always want to be a part of? Yep. So, gold higher on the dollar bearishness situation. That is expected. But on the other side, it started from middle of nowhere and we are in the middle of nowhere, in the middle of the range. And it's very clearly that we are in the middle of the range, because what's drive goals isn't there at the moment. And market participants, more than anything else, has taken note that we need continued bearish dollar CPI to continue this. But on Friday, we have PCE that could drive the market lower. Sorry, dollar lower, gold higher. And that's the most important driver this week to push gold higher. So in the meantime, for me, it's just going to do whatever it wants to do. And it has been doing whatever it wants to do for quite some time now. And yes, we are slightly increasing higher. We are not having so deep pullbacks anymore. We're probably going to have a breakout higher up to 130, up to 3,500. But the catalyst for that has to be inflation in the United States coming in lower. It hasn't happened yet. We saw PPI being much higher than expected. CPI coming in fairly normal. So your last kind of ditch for August is that PCE on Friday comes in somehow weaker. We also have GDP this week, which accounts for April, May, and June data. So data for April is going to be released. And does that matter anymore? Not so much. We really want to look into the future and what this tariffs has to do with us. But yeah. And then, of course, look at oil. And I really would like to look at oil. And I would argue that it's bullish. Somebody said, look at for a good sell setup. And I'm like, why would you sell oil? Well, oil is currently at 6,400. It was at 62 about earlier. And I would argue going forward that we are probably going into 75 level, probably. And why would oil go higher? There's a couple of important factors to it. And number one is production, both in the United States for that matter, but also Saudi Arabia and Middle East. Secondly, is the risk on that I anticipate coming in these 2 weeks, but also inflation in the United States is a driver, vice versa. Oil drives inflation, inflation drives oil higher. So if oil comes in higher, that also leads to higher inflation. And that also kind of kicks down the door of rate cuts. Not necessarily rate cuts in September, but for December. So a higher oil now, and I would argue that it has turned around and turned bullish. Yeah, I think that is, as we all know, support and resistance level. That is the break. Yeah, okay. A pullback would be necessary, but that is definitely 100% something that would be absolutely fantastic. That makes my heart think something in that direction. Target monthly. It's monthly too far away. Yeah, we're actually too far away on monthly. Again, for that matter, didn't I say 75? Yeah, I can say 75. And then we'll take it from there after that. Oil is supposed to be reversing, but the bullish momentum is printing is crazy. Malik, I don't know what you mean by the current bullish momentum is printing crazy. I would argue that this is what you want to see. Don't you want strong bullish direction? And then he would say, but I want my price 64. Do you know what the mindful trader that I am would say to that? That's what you want to see. And 64 you will get. Just wait. But what if I don't get 64? What if I don't get it? Then it wasn't your setup. Then it wasn't your opportunity. Because if you don't get your opportunity, generally speaking, it's a bad setup. And what's a bad setup? I mean, if it doesn't come back down to 64, it doesn't come back into your zone, and you chase it and you try to buy now 64, 69, do you know what's going to happen? Like a good little fantastic happenings. It will drop like a ton of bricks. Like it's just my pair of luck. So if I try to chase, it normally takes the peak. So I stopped chasing a million years ago. It doesn't matter anymore. If it goes higher, I see it as a great opportunity to look for the pullback. Because if I buy now, I'm just going to lose money, and it's just going to go down to 62 for some reason, and it's just how the market psychology thing works. EJ, yeah, I'll do yen pairs now. Bullish. Okay. Slightly at least. Wrong. I really wanted to come down to 172. 172, sorry. Currently tried to make a higher high. Couldn't do it. And I hope that either by New York session or London tomorrow, we're down at 172. And I really hope that we can take it up to 173.20 either this week or next week. And I really hope also 171.60. And take profit for me is next week's weekly target, whatever this becomes. That depends on this week. So again, either second or fifth, and it depends when we do hit the weekly target. And for now, it is 173.20 or so. Nick wanted to sell 66. Okay. Enjoy the sell, but more than anything else, I know that Nick would need is a reversal. And when it comes up hot and juicy like it's currently doing, then it would make at least me very careful. Same situation for the British pound. Hopefully, okay, it's as far as stretch to hope for 198.50 or something. It's about 50 pips lower. But if it doesn't, then a new higher high, higher low is equally okay for me. Going, and if that is London Open tomorrow, then I'll take that up to 260. Not financial advice whatsoever. This is just my thoughts of where I want the market to go before I move on. New Zealand yen, if I can get a lower, great, but more than anything else, break up to 86.80, down to 86.50. That would be mecca for me. Then I would see stars. Just waiting. Like this thing is just slowly going higher. And now since it's slowly going higher, I know it's gonna break one time or the other. Dollar yen up to central pivot. It's probably a place to sell, but nothing for me at the moment. Aussie dollar, Euro dollar, Australian dollar, pound dollar, New Zealand dollar. Again, New Zealand, new higher high, higher low. That would be absolutely perfect. So for me, there are the cooking is cooking. About to where is your Google? Maybe I should actually. Maybe I should. Maybe I should take on this one's actually. It's getting a bit crazy out here, right? I love it. Anywho, yeah. Okay, cool. That's what I thought, Chandler. Anywho, I think dollar weakness. I think yen weakness in about from this week until next week. and I am that close from pulling a trigger on some of these trades. So stay tuned in Discord. And yeah, I love you, family. I wish you the best. Don't do anything I wouldn't do myself. And until next time, boom.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.